The income statement. What is accounting? Accounting is the process of providing financial information to business owners or other interested parties. It involves the process of collecting, classifying, analyzing, and recording financial data to produce meaningful reports. Two important reports used by a business are the profit and loss report or income statement, balance sheet or statement of financial position. What is an income statement? An income statement is a report that shows the business's profit or loss over a period of time. An income statement will include the following: money received through the service or trading activities of the business. This is referred to as the revenue or income of a business. Money spent in earning that income. This is referred to as the expenses of a business. Income statement accounts. Income or revenue. Income is the receipt of resources generated by the service or trading activities of the business. Income could include income from sales. An example would be sale of computers. Income from fees. An example would be school fees. Service income. An example would be plumber's service charge. Expenses. Expenses are costs incurred in earning income. Expenses are resources which are used to earn current income only and provide no future benefit. Expenses could include cost of goods sold. An example would be purchase of raw materials. Operating expenses. An example would be employees' wages, electricity, or rent of premises. Financial expenses. An example would be interest on motor vehicle loan. The bottom line. The profit or loss is the difference between revenue and expenses. If the end result is a profit, this would indicate that the business made money during that period. If a loss is obtained, then the business lost money in that period. It is important to remember the rule: profit equals revenue minus expenses. Let's take a look at a sample income statement for a service provider. This income statement is for the service provider named Professional Services R Us Pty Ltd. The income statement is for the year ended 30th of June 2020. The first section of the income statement records revenue, such as service fees to the value of $90,000. The next section records operating expenses, which need to be subtracted from the revenue. The expenses in this case are advertising, bank fees, electricity, insurance, motor vehicle expenses, rent of premises, telephone, wages. Each of these expenses is added, resulting in total expenses of $55,900. Net profit can then be obtained by deducting total operating expenses from the revenue. This will result in a net profit of $34,100. Now let's take a look at a sample income statement for a retailer or manufacturer. This income statement is for a business called Doug's Widgets Proprietary Limited. This income statement is for the year ended 30th of June 2020. The first section records revenue, in this case from sales, totaling $135,000. The cost of goods sold needs to be subtracted from the revenue. Stock at the beginning on the 1st of July 2019 is $27,000. This relates to stock that is on hand at the beginning of the financial year. Add purchases, $55,000. This relates to the purchases that have been made during the year. The value of stock and purchases comes to $82,000, less stock at the end of the year on 30th of June 2020 of $32,000. This relates to stock on hand at the end of the period and is normally done via a physical stocktake. We deduct this amount to show the change in stock levels on hand from one period to the next. Here, the stock at the beginning less the stock at the end of the period indicates an increase in stock levels of $5,000 from the start to the end of the year. This results in a total cost of goods sold of $50,000. The gross margin is obtained by deducting the total of cost of goods sold from the total revenue. This gives a gross margin of $85,000. Operating expenses then need to be subtracted. The operating expenses in this case are advertising, bank fees, electricity, insurance, motor vehicle expenses, rent of premises, telephone, wages. This results in total expenses of $55,900. Net profit can then be obtained by deducting total operating expenses from the gross margin. This will result in a net profit of $29,100.